Making $500 a day as a trader has never been so simple. And in today's video, I'm going to break down exactly how simple it can be. Easy? No. Simple? Yes. I have been trading for nearly 9 years now, and I've had the massive days, with my biggest day ever being nearly $90,000 trading the S&P 500. What I've discovered as of recently is when I weigh out my stress, risk tolerance, and simplicity within my trading, I have been much more comfortable with less risk, less time needed, and still consistently making around $500 a day, which over a year's time span is over $100,000 a year trading. And while I may end up sizing up again this year and going back to my routine $5,000 days, this video is perfect for anyone who thinks $500 a day will impact or change their life for the better. Now, the mission today is to teach you and show you how simple it can be to make $500 a day as a trader. With doing that, there's 3 steps that we need to take and 3 steps that I need you to understand. The first is system and risk. Now, with our system and our risk, this includes our day-to-day processes, how much position size we're using, what instrument we're using, and everything that we do on a day-to-day basis that leads us to profitability. Second, we have our strategy needed, which in today's video, I'm going to be breaking down my 2 favorite strategies. One of which shows me supply and demand, where buyers are sitting, where our sellers are sitting, where price is likely to reject and bounce, and where smart money wants their entry. I'll also be teaching you my VPA model and my price action model, which I use the 5, 15-minute, and occasionally the 1-minute on to find entries intraday off of our hourly and 4-hour levels, both of which are very important to my edge and have helped me sustain and become profitable over my 9 years of trading. And finally, psychology and discipline, what I like to refer to as my edge. I'm going to teach you exactly what you need in here and with your day-to-day discipline to make and keep $500 a day. Because I'm confident if you mimic what I'm going to show you in this video, making $500 a day does not have to be difficult, but keeping it is the hardest part. And believe me, I know. I owned a prop firm. I've been a trader for 9 years. I've seen the internals of what helps traders who are winning keep winning and what blows traders up over time. And I'm here to tell you what I'm going to teach you in the third part of this video may just change your life and your trading forever. That being said, the first step to making our $500 a day is system, risk, and vehicles. You need all 3. Now, the first option for you as a trader is futures. Put this down here. Now, as a futures trader, there's a few different options you have to trade. You're going to be trading either A, NQ, B, MNQ, C, ES, or D, MES. Now, if you don't know the difference between those, NQ is the big dog. You're going to be making or losing $20 for every point NQ goes up or the NQ goes down. MNQ is the lesser version, the smaller version, the micro. It's going to be making you $2 every move up or losing you $2 every move down in the right or wrong direction. ES will be making you $50 every move up or every move down, depending if you're on the right side of it, or MES will be making you or losing you $5. Now, I personally recommend for you, if you are going to start trading, micros don't get enough credit. I've seen a lot of traders do really well trading micros because it allows you to scale in and out of your position versus if you have 1 or 2 contracts of NQ, it's going to be really tough for you to scale out with 1 contract or 2 contracts. So my recommended size for you as a trader, if you're brand new, is going to be 1 to 2 NQ. I want to go to NQ, 10 to 20 MNQ, 1 to 2 ES, or 10 to 20 MES. Now, this can be on your own personal futures broker. You can trade these on your funded accounts. Just make sure you're following your prop firm's rules. But I always recommend starting small because to make $500 a day, all you need is this size. You can do this with 1 contract a day with the right risk-reward ratio. Now, the second vehicle I'm going to show you is options. Now, as an options trader, you have to be very careful about many things. Greeks, expiration dates, ticker symbols, you name it, you have to be very careful because options are very volatile. Now, as an options trader, I'm gonna recommend that you trade for your options. I'll tell you what not to trade first, is no DTE, zero DTE, excuse me, not for a while. Instead, if you're trading the indexes, so SPY, QQQ, I want you trading out at least 2 to 3 days expiration. One day expiration if you're experienced. I want you taking contracts that are $100 to $250 a piece and a max position size of $2,000 to $3,000 per trade. Now, obviously this comes with different risk parameters, but I want you trading a maximum of $2,000 to $3,000 per trade. Now, I'll explain to you on the charts why that is important later, but there is no reason why you can't make that $500 a day managing your risk properly with that 2 to 3K size. And finally, we're gonna go over equity. Now, equity is only an option for you if you have margin and if you have a lot of capital. I traded equity for a long time, and I've even been trading equity as of lately, getting my groove back, getting my confidence up after taking a little break from trading, and it's been making me $300 to $500 a day in between futures and options. So as far as equity goes, I'm gonna recommend that you go ahead and trade. I'm just gonna copy and paste that over. That you go ahead and trade. Smooth that up a little bit. There we go. I'm going to recommend that you trade 100 to 400 shares per trade. Now, if you're trading a cheaper name, you can trade more. If you're trading SPY or QQ, it's gonna cost you a lot of money in margin. You're gonna need a 6-figure account. So depending on how much money you have, what your risk parameters are, if you're trading penny stocks, mid-size stocks, large caps, whatever it may be, this is a good place to start because it allows you to scale in and out, and you're not trading thousands of shares, which sometimes with market orders can get you real bad on your fills. So 100 to 400 shares per trade, less risk involved here because it's very simple. It's similar to futures where you know exactly each point up or each point down, you know exactly what you're gonna be making or losing, versus options here. Sometimes you have gamma involved, explosive moves up, explosive moves down, you have implied volatility. There's a lot of different things that come into play when you're trading options. And I know this because I've made 7 figures trading options. So you just have to be very careful when you're doing that. Now, being said, let's head on over to our sizing and risk guidelines. I already had this typed out, but we'll go over it again. So 1 to 2 contracts of NQ, 10 to 20 contracts of MNQ, 1 to 2 contracts of ES, 10 to 20 contracts of MES. Great for beginners. Micros are great for beginners, etc. Options, same thing here, 2,000 to 3,000 per trade. It's not required. I always recommend starting with less though. And then finally, we're gonna switch this to 400, 1 to 400 shares at a time. I enjoy smaller lots versus 500 to 1,000 because of capital requirements and also potential risk and needing bigger movements compared to options or futures. So it's all very important to us in our road to making $500 a day. Now, the second part of this is our strategy. Is our strategy. You need to have a set strategy and a good proven strategy if you want to make money long term and if you want to make your $500 a day. They say that trading psychology is 90% of the game, which as someone with great trading psychology and that I think I am the most disciplined trader in the world, or at least one of them, I can confidently tell you that trading is not 90% psychology until you get your strategy down. Once you master your strategy, then the psychology kicks in. Then you and I can work together on getting your discipline right and helping you scale your trading. But until then, we got to get you right on your strategy. So let's go ahead and get that going. Now, as far as our strategy goes, there's 2 pillars to my strategy. I've tried a lot of different strategies over the years. And the first thing that I do, and what I want to teach you, is how I find supply and demand the right way and the simple way. So we start with our 4-hour chart here. Now, what I want you guys to do is we are gonna look for two things. We're gonna start by looking for small red candles, followed by aggressive buying candles, green candles. Now, there's a second pillar to this particular strategy where you'll find that your win rate will go up if your second aggressive buying candle is supported by high volume. What I mean by that is, let's say this candle right here, has volume that looks like this. Now, volume is all relative. In our second candle, right, our bigger green, has aggressive buying volume that makes this not an anomaly. You want it to have aggressive volume showing that the move was supported by real buyers, and then there's going to be a lot of orders left unfilled in this area, which is going to create our demand zone, right? Or some of you guys know as your fair value gap. On the flip side, we're going to be looking for supply zones, small green candles, followed by aggressive selling. As you'll see right here, same idea. You want us to see aggressive selling volume like this in accordance to the previous buying volume right here. You want to see that volume pick up so that when you come back and retest the supply, those sellers will still be sitting there. Those stop losses have been moved down, and you're going to get that move back down on that lower high or higher low, depending on which direction you're trading, that you're looking for. Now that we know that, let's go check out what this looks like in action. Now, there's a lot of examples of these, but as of recently, we can tell, right? We're going to start here on the 4-hour chart. Okay, so we scan through this. We always want to be forward-looking, but for example's sake, let's go back and find some good examples that we have. First example here, we have an aggressive move up with a smaller red candle here. Now, what I'm going to look for on this, I like to use the wicks for reference, but I have found over my 9 years of trading that body open and closes give us the best confluence. We're going to go ahead and mark this out. Now, what do we notice about this? We have this aggressive move up. We come down in this area. We get a nice push up out of here from like 491 to 498, so 7 point move. Once we fail this level, this demand turns into supply. And that's the beautiful thing about trading supply and demand, is we see an aggressive move up, push down, failure, just like resistance turns to support and support turns to resistance. Same thing here. Push down, aggressive move back up, and then further move down. We go back even further. See what we had here. We had small green, aggressive red candle with confirming volume. So we go here, let's mark out our demand zone. There's two ways to do this. You can either if you want to play it more aggressively, right, you can always set your stops on any trade you take above the previous zone, because if we break and hold above this on this time frame, we're likely going to switch our bias and move to the opposite direction. Now, on the flip side here, let's draw this out. The body close here, down to the wick. Let's see if we saw any movement. Just about. We have this fair value gap created between these two candles, right? We come up into fair price here. We touch this to a T and aggressively move down. Now, unless you're swing trading, I don't expect you to just enter off the 4-hour chart. You get the point of how we find these levels, and it's very damn accurate when we do, right? When you can find supply and demand the right way, instead of just looking at charts like this. A lot of people do it like this. They look, okay, we've touched here 5 times, this is supply, and we've touched here 6 times, this is demand. And while that will work sometimes, the problem is that you end up, it takes the 1 or 2 times where it doesn't work, where you have no wick to gauge your risk on, and you end up getting smoked. That is not what I want to happen to you guys. So instead, we look for a model that gives us a little more edge, which when you use candlestick structure and where smart money wants to buy, that's exactly what it's going to give you. Combining fair value gaps with, proven methods on finding your supply and demand, as I'm showing you here, that's how you're going to find those zones where smart money wants to buy or wants to sell. Now, the second part of this is our intraday plan, because looking at these levels off the 4-hour only does so much. So we go here and let's talk about what this looks like on a 5-minute structure. Now, I want to show you first, this was a trade that I took today. I ended up making $300 on it, and I fumbled the bag, so as you can tell, right, I have this marked out from earlier. I had short bias today. I mean, the charts were very clear that we wanted to go down today. At least, you know, looking at these charts for years, it was very clear to me. However, I had things to do, only had time for one trade. And so that being said, when we pushed down aggressively on this 5-minute candle, right, through our pre-market low, or yesterday's low, pre-market low here, fair value gap, impulsive candle supported by volume here. Let's go ahead and move this up a tad bit. There we go. So you guys can see that. Impulsive candle supported by volume here. That shows me that when we retest back into this area, there's a high probability we're gonna see this be the lower high. Now I entered on this candle here, entered on this push right here, got one trim off as we exited this zone, back to this candle close, or open it, or close, excuse me, up here. Enter here, trim here. I wanted my big trim to be down here. I was looking for $1,000, $2,000 day today. Big trim at low day, didn't get it. Ended up getting stopped on this push back up. However, what got me back enticed in this trade, but I had to go and I don't like to leave trades running, is when we move on up, we failed to go higher. So whenever you see this, guys, whenever you see our opening print here and a failure to touch that opening print, an aggressive sell, or vice versa, you flip the chart upside down, you see an aggressive buy, there's a good chance the market's telling us we are about to dip lower, because buyers could not sustain getting above opening print. They couldn't sustain this move up. Volume is decreasing, as you can see throughout this move up. There's a good chance we're moving back down. That's why I told Team Bull is that, you know, if we get this move down, pop back up, keep your stops above this high a day and ride this thing to gulag. And that's exactly what ended up happening. Unfortunately, I couldn't catch that part of the move. The whole point of this is that when you're making $500 a day, this trade being a good example, if we enter here, if we enter here, we have this lower high and we enter here at 474. This is a great example for you guys to learn from. We enter here at 474, okay? And if we have this risk here of anywhere from 474 to 476, right? That's $2 of risk on SPY. That means we need at least $4 of profit on the move down. So for 474, we need to go down to 470, right around here, right? That'd be just below low of day. This is a good trade. Now, if you're trading NQ, let's go over to NQ quick, just so you guys can get an example on this. If you're trading NQ, let me go to this exact trade here. Where is this? Right around here. Okay, so 19,490 up to 19,570. Now, trading one contract of NQ, that's not gonna work for you. You would have to be trading your micros, because if you have an 80-point loss with one contract of NQ, that is way too much risk for you as a trader when you're trying to keep your risk to a minimum of like $100, $200, $300 a day. Now, granted, it doesn't have to be risk 250 a day, make 500. It could be lose 500 in a day, but then on your other days, make 1,000, 1,200, 1,500, and you still are back to averaging that $500 a day, right? It's all about how much risk you have to how much reward you can extract from the trade. And if you can do that, right? If you can recognize these setups and recognize your chart patterns and get good entries, use your wick highs and wick lows as your stops, make sure you have a good solid 2, 3, 4, 5R. That's what's going to get you to that next level as a trader and to get you that $500 a day. Now, going back, it's a little simpler to look at. Now, mind you also, all of my trades on QQQ and SPY are valid on ES and NQ. You can use this strategy for futures. You can use this strategy for, options, for equity, all the same thing. It's all the same beast. If you're trading price action, you're trading volume, you're trading supply and demand, it all intertwines into a strategy that helps you with all of the above. So now we look back here again, right? Another beautiful example of what I'm looking for. So let me find it again. We don't want that. With this, another thing that I love to trade is the 15-minute orb. It's a textbook staple in my strategy. Now, every day I mark the 15-minute high and I mark the 15-minute low. And I'll have to make a whole video on this because I could go on about the 15-minute orb. But the 15-minute high 15-minute low. Now, what I want to see when I'm trading the orb is I want to see a 5-minute close above our high or below the low. Unless we have that 5-minute close up here or below here, I'm not taking retests. However, when we get that 15-minute close below, you can look for it back up for the pop-up into here. As long as we don't close above this, or if you wait, if we retest back up, move a little down, you set your stop above this wick, you enter here, you write it down. So from here, we have 481 up to like 482. We have $1 of risk. We need $2 to $3 of downside in order to make this trade a profitable risk reward for us. And that's exactly what we get here. So when you're trading the 15-minute orb, you mark the high, you mark the low. I personally don't trade the first 15 minutes regardless. And you wait for a 5-minute close below or above. You wait for the retest of that level and you ride it to Gulag or you ride it up to the staircases of heaven. Either way, it's been a very profitable strategy for me and a very simple one at that. So it's all about simplifying your trading. And as of recently, I've watched a few ICT videos. I understand fair value gaps. I've been trading them for a long time. And what I've found, guys, is the simpler you can make your strategy, the more confident you can become in how you trade every day. Then it boils down to your discipline. And that is where I personally, not to toot my own horn, I help my students kick fucking ass in the market every single day in Team Bull and through my personal mentorship. So I'm really proud of that. I build really disciplined people and disciplined traders. And after you learn your strategy, that's what matters. Now, on to that third and final part, the discipline. Let's talk about that. We got a whole canvas here and we got a lot to discuss. Now, when it comes to discipline, when it comes to making $500 a day, there's a side of this that nobody talks about, absolutely nobody discusses. And that is becoming a disciplined person inside the market and outside. The first thing that you need to do is do an audit. You need to audit your morning routine. I fully believe that no trader can have a shit morning routine, come in exhausted, come in unfocused, and make money. So ask yourself, are you waking up? You waking up 5 minutes before open or an hour? The answer here should be an hour. I want you guys up at least 1 hour before open every single day. Your brain needs time to start functioning similar to a car warming up, right? You wouldn't go get in your Lambo and just start it and drive off. You gotta let it warm up. You gotta let the engine start functioning. You gotta let the fluids get moving. The same thing with your brain. You have to let your brain and your neurons start firing and get to thinking clearly, because you are about to put real risk and real money on the table that if you're not careful, you will get cooked. That is step one. Now, step two is, what's the rest of your morning look like? What is your morning routine? For me, it's robotic. I'm up at 5 a.m. every day. I read, meditate, get my focus right. Sometimes do cardio, call my mom, call my loved ones, I get the good neurons flowing, get the good dopamine flowing, the expensive dopamine, that's what we do here. And then I get my game plan ready, which is part two. Every single day, you have to go into the trading day with your levels and plan ready. You can't keep going into the day guessing and unprepared. So something I do every single morning is, at least by 7 a.m., I live in Colorado, so mountain time, I'm getting my levels ready. I'm taking a peek at SPY, QQQ, Tesla, NVIDIA, Apple, all the main names. And I know exactly what my ideas are gonna be for the day, what my levels are gonna be, where's my supply and demand, where's my hourly levels, where are my 4-hour levels. I know all this. And it gives me that little upper edge that I have to have as a trader to make it in such a tough industry. It's all about having an edge. And when you can give yourself an edge through your daily discipline and little things you do for yourself and in your morning, that changes everything. It changes everything. And finally, 5 minutes before open, I want you guys to start doing, before open, your mental check-in. This is where you sit back, you put your phone down, and you ask yourself, how am I feeling? How's my impulsivity feeling? How is my anxiety? Do I have any important events today? How's my trading been the last few days? And how have I felt when I pressed the buy and sell button the last few days? You need to take a mental check-in and then score that for yourself physically, not in your mind. Your mind's great for a lot of things. It's not great for organization and trying to, get your trading organized. But I want you guys to organize that pen and paper and rate yourself 1 to 10, how organized you are, how focused you are. And if you're at a mental A game, if you're at an 8 through 10, you can trade. If you're not at an 8 through 10, if you had a shitty night's sleep, if you're not focused, if you're going through a hard time in life, if you have a birthday that day, you don't trade or you extremely size down. And if you can get yourself to do that and to really respect that, everything will change for you as a trader, I fucking promise. I promise once you get all these little things dialed in, the little pieces add up to a massive victory. So get those dialed in, get yourself focused, get yourself disciplined inside and outside of the charts, and everything will start meshing for you as a trader. I know this after nearly a decade of doing it, going through the highs, going through a lot of lows, and finally finding consistency in myself a few years in. I tell you this as someone who wants to see you disciplined, who's been a fat fuck in the past, a lazy and unproductive and broke, and now is a profitable trader in the best shape of my life, running multiple 7-figure businesses and living a pretty awesome life that I knew was possible and trading made happen. So with that, I hope you guys take these notes, apply them to your daily life. Let me know in the comments what you guys want a video on next, whether you want a day in the life of the most disciplined trader in the world. If you guys want to learn more about the 15-minute orb, let me know down below. I'd love to help you learn. And make sure you guys hit that subscribe button. See you next video.